All right, good evening, everyone. This is Joe Henches with Beyond the Chart, and today is the technical analysis stock market today, February 11th, 2014. The Dow Industrials were up another whopping 192 points as it continues the snapback, almost like a bouncing ball. You slam the ball into the concrete and it bounces right back up, and that sure seems to be what this is trying to do. It's retraced a little over 50% on the Dow Industrials. The S&P 500 has retraced a little over 70% of its move down from this high up here to this low. And I'm measuring peak, the intraday high to intraday low is what I'm measuring. So we're basically, potentially this was kind of a resistance area right in here. Let's see if I can. And we're kind of running up next to it, okay? This previous bottom, so we're kind of running up next to it, and we're just going to have to see whether we can push through it or not. I just have a feeling this thing is, it could surprise everybody. I think everybody thought that, this was a heck of a move down, and of course, I'm thinking because we broke this 14-month trend line that some damage has been done, and we've got this bounce, and it's going to roll over. But again, the market's got to, you could think what it's going to do. It's going to do what it's going to do. It's like you have to sit back and just watch the price action and see how it's trading and just kind of go from there, depending on how it's trading. When you try to guess, like right now, you shouldn't be trying to short this thing. Other than an individual stock, if you've got a sign on an individual stock. But in terms of the market, you shouldn't be trying to short the market just because you think it snapped back too far. I mean, you got to wait for the market to tell you it wants to go back down. So that's, let me take a look at the Nasdaq. The Nasdaq, again, same kind of snapback rally in here. Almost like a strong little V-shaped type thing. And, we had a similar type of snapback over in here, and it kept on going. The main thing too on the Dow is, we just felt like we had 5 waves up, and I felt like our time now I'll say that the count in here was a little rough. Okay, the count in here was a little rough in terms of getting a clear 5 waves, and then this move down here breaking well below here is kind of throwing everybody a curve and breaking this trend line. So that's why we're just going to have to watch to see what this thing really wants to do. The transports has not bounced back nearly as much, so it'll be interesting to see if the transports start to roll over. The New York Composite has a similar type snapback look. Almost looks like 1, 2, 3, 4, 5 waves down, which would indicate that this is the direction. But we're going to need to get this thing rolling back down like this if this is truly going to be the direction. So let's see. Next one we want to take a look at is, let's go ahead and move into some of the indicators real quick, and then I'm going to come back. High low is really not showing. We're really not getting a lot of power in terms of new highs, new lows. So that tells you, I think, that some damage has been done to a lot of these stocks on that down move. Short-term trading index, yes, it's kind of low. Lowest reading in here, 0.67, 0.7. Today was the lowest one of these 3 low readings of the last 5 days. But we don't have the blue line down giving us a signal that we're at a top. So we could have more work that we do. And the other one is, well, let's see, VIX. I don't think we looked at the VIX, did we? The VIX has just pulled back, real, low. It's not as low as it was getting down here, but again, it's basically retraced all of this move, kind of mirroring an inverse relationship to the market. Let's take a look at the home builders. Let's take a look at semiconductors. Semiconductors broke this trend line. It snapped back all the way to this trend line, so that's been a heck of a move too. Almost like the Nasdaq in terms of the move. Now here's one where I did think we had 5 waves down, 1, 2, 3, 4, and 5, And so again, if this is truly 5 waves down, then this is the direction of the market, and that we will be looking that this is corrective, and we'll be looking for this to reverse and come back down. So we'll have to see if this count is correct, and that we start to turn around. Semiconductors, let's take a look here. Home builders, and then we'll take a look at the ETF. Home builders hasn't done anything the last 3 days. We got the big move on Thursday, and in the last 3 days hasn't done anything. XLF, financial, kind of similar to the semiconductors, pulled up to this trend line. Now this is a much longer term trend line. This is from 2011, and it broke this trend line, and now it's snapped back up to it. And yeah, it's a little bit over the trend line, but not much. We'll have to see whether or not it rolls back over. So next couple of days are going to be pretty critical. Okay, today Melco Crown, we got stopped out of this one. I had said we're looking, if we get above the high of this day in here, and we got to close above that high. Frustrating that we've gotten this little chop sideways in here. The initial risk on the trade was 3.44 points, and we lost 2 points on the trade. So I'm never happy when we're taking a loss like this, but the loss was less than the initial risk on the trade. So that's somewhat comforting, although kind of hard to say you're comforted by it when you're taking a loss. So QIHU is what I call a counter trend trade, and so we're still in this one. This was an outside down day today, although I would have loved to seen it close below yesterday's low, and it didn't. But still, the exit is on a close above the prior 2-day high. So today's day was the highest of those two. So we'd be looking for an exit above that as a stop. Okay, and right now I'm looking to see this thing continue to push on down to the downside. Okay. Now I want to go back and take a look at the Dow Industrials again, and I want to look at something here. This move, like I said, is a little bit over 50%. Now, there's been a lot of talk of people talking about, what happened in 1929, and we had a 1929 analog. People looking at, does this map to 1929? And when you go back and look at 1929, so here's 1929, and this looks a little funky. These are just dots because we didn't have high-low on them. So let me turn this into a line, and we'll be able to see this a little bit better. So what's interesting is here's the peak on September 3rd, 1929, and we sold off. And a lot of people were thinking that the move, this push up, this sideways move, just kind of like what we had last year, and then this push in the last few months, like we've rallied up, and then this sell-off here, and then this rally. It's interesting, this rally from close to close is 50%, okay? This is 50% of this downward move, and then it rolled over and went in the tank. So also I'm saying, I'm not saying this is going to happen, but I'm just saying it's not unusual to get a 50%. And if you looked at ours on a closing basis instead of intraday high to intraday low, a 50% of closing high to closing low on the Dow would be 15,980. And I think, where are we tonight? We're 15,994. So we're slightly above that percentage. So the point of this is just to say we are well within the range of a snapback rally that could roll over and turn down. So we have to keep our eye on the ball here, and just don't get too overly bullish until we start to see this thing continue push, or it could just turn around and shut the trap on us. So anyway, this has been Joe from Beyond the Chart. Thanks for stopping by. Have a great Wednesday. We'll talk to you tomorrow night.